Gold skyrocketed over 2,000%, oil around 1,000%.
If we were to enter recession, that means job market must slow down. And right now, the trends that we are seeing is heading there.
I can see the market doing the opposite. So whenever we see high delinquencies, people not being able to pay their rents.
Grab it, but grab it fast. Okay.
Yeah.
Hit and run.
Yeah, exactly.
Bye. See you later.
Welcome everyone to our very first The Expert podcast, where we will be discussing on the recent market and finance related news. So let's dive right in. To my understanding, stagflation, well, in simple terms, is stagnant inflation, right? So I'm guessing slow economic growth, high unemployment, rising prices.
Yep.
Well,
And low GDP.
Low GDP.
Yes.
Well, lately this term has been thrown around a lot lately. So I guess the question here is, are we on the verge of stagflation? And if we are, what are the implications on the economy and individual investors?
Okay, you want the short answer?
Give me the long one.
The short answer is I don't think so. Okay, mainly because the economy that we are in right now is weaker than in the 1970s. It's weaker in a sense. It is highly leveraged more than before, and more debt we have, the US essentially. But the longer version of the answer, okay, so stagflation, I think it only happened once in history, right? In the 1970s.
It was
Never
quite
before.
rare. It's quite rare.
Yeah. So in the 1970s, it was like a long duration, like 10 years. It was a decade-long duration of, as you said, high inflation and everything. So the fear is, so we just ended the first wave of inflation.
Okay.
In the 1970s, there was like 3 waves of inflation and high unemployment and low GDP growth. So we just ended the first one, and the fear is we are heading into the second one. But my opinion is, even if we go into the second wave of higher inflation, the Fed, when the Fed increases rates this time around, the economy won't sustain for higher rates further and higher than this. So we will automatically go into a deflation rather than stagflation.
Does deflation means recession is coming?
Yes, exactly. So if it does, let's say higher inflation becomes reality, we will go. There's a higher probability. Let's put it that way. There is a higher probability that we will go into a deflation rather than a stagflation. So
yeah, sorry.
no, the second part of your question was about the assets, what's going to happen to them. So in the 1970s, when stagflation hit, gold skyrocketed over 2,000%, oil around 1,000%. Stocks were more or less the same place, no clear direction, and it was choppy. And the dollar lost like 30% of its value, the dollar index, let's say.
Do you remember at the time, when was that? It's around 1970s, 1980s, right?
Yes.
Yeah. So at the time, I think there was a war that caused this inflation. So like the central banks, even though they have like insanely high interest rates, but inflation just keeps on rolling. Yeah. So like monetary policy has nothing to do, has no effect on bringing down inflation.
Exactly.
But the situation now is slightly different. Right now we have war. We have war in Ukraine. We have war in Israel. But the issue is not that severe as in the past, because like both of these countries, they are not producing oil, so it's not affecting oil price that much. Actually, a very big part of it is caused by the housing market, because if you were to look at the breakdown, the housing prices actually stands about 40. Yeah, more than around there for how CPI is calculated. Even after we have like very high interest rates for quite a long time, housing market has not fallen, as in the price has not fallen, surprisingly. Do you think like immigration is the one that is causing like housing prices not falling, like because
That's a possibility,
people, yeah, as in immigrants are entering the US, and of course they need a place to stay, and that's causing
So
like,
there's demand.
yeah, the demand
more,
is always there.
Yeah, it makes sense.
Yeah,
Makes
even
sense.
though like rent prices are going down, new housing is not going down, surprisingly. Yeah, and
okay.
even economists are surprised. Even Jerome Powell is surprised as well. Yeah, because he was expecting like, okay, interest rate is gonna go up. It has been staying high for quite a long time, but then housing is not going down.
Yeah.
Yeah,
So in a way, maybe they want the central banks, the Federal Reserve in this case, they want higher rates. Like, if they can do it, will they want it to increase rates even further, just to decrease these asset prices and inflation also, if they can do it?
as in interest rates staying high.
Yeah, and getting it even higher.
But it's gonna be a risk, because like if interest rate were to stay even higher, like we have elections coming, so
Exactly.
it's not good for politicians. Of course, central bank has nothing to do with politics, but
Well,
yeah.
That's another topic for another day.
Yes, exactly. Yeah.
Okay. Well, Asado did mention that we are more likely to enter a recession rather than stagflation. Do you have any opposing thoughts, or you agree with him on this?
My views is the same, but the way I would explain it is because, like, okay, if we were to enter recession, that means the job market must slow down. And right now, the trends that we are seeing is heading there, and that's a good sign. Like, because we doesn't want high CPI, we doesn't want high inflation, so the job market has to slow down, and we are seeing that. Unemployment is at 3.9%, and there's also another rule. It's something that the Fed has created like many years back. It's called the SAM rule. So the moment SAM rule passes 0.5%, then recession will start. And right now, we
Is
are
that what?
is at 0.37. We are actually very
close.
near
Yeah,
to
that's
that
getting close.
yes, to that threshold. And if we were to extrapolate that trend, we will reach that point in November 2024, which is end of this year.
Okay.
Or on the lower bound, it's gonna reach in June 2025. So
Okay.
we're actually not that far away. It's just end of the year or 1 year later.
Yeah,
Yeah.
makes sense. I see like the same period of time also. We're gonna hit recession in that period of time.
Yeah.
So-
If you are wondering what is the SAM rule is actually a mathematical model created by the Fed that averages unemployment rate by 3 months. So it's a quarter. Yeah.
Okay.
Okay.
So just to remove the noise from the monthly unemployment data.
Okay.
Okay. Well, seeing how the pattern is right now, do you guys have any predictions for the market to, how would it react?
We're talking about recession, right?
Okay.
But before recession, I can see the market doing the opposite, the exact opposite, like the stocks indices going up, like
Okay.
maybe a parabolic move as a last move before everything reverses. So maybe S&P we can see 6,000 this year.
That's
before November
how much
2024?
is today? 5,000 something. That's about
5,200.
15% more to go. Is it?
5,300?
5,000 trend. That's
I
about 10% more to go.
Yeah.
Wow. Okay.
Yeah.
Okay.
It is a big possibility, and it's gonna be like, and when it reaches, if it reaches 6,000, the sentiment will be extreme around that those prices. So that's when we will see the reversal. When everyone is on board, it's bullish. It's gonna go up 7,000, 8,000, 9,000. We're gonna see a reversal. That's how I see. I
Okay.
think it is.
That's
I have a same view, but a different way of explaining again.
Yeah.
Of course, there's always a lot of views for the same market movement.
Yeah.
Of course.
Yeah. One thing is, okay, the housing market is gonna slow down because we see that although the housing prices is not slowing down, but rents are actually slowing down. If you know the real estate cycle, rents is always the leading one. It's always the first one to react to anything in the economy. So if it's going down, and it's actually slower than as in rent prices right now is actually lower than the one that we see during COVID times. Yeah.
But rents, not only for housing,
Mm-hmm.
it's for like businesses also,
Yeah. Yeah.
like delinquencies,
Mhm.
right? So whenever we see high delinquencies or people not being able to pay their rents, usually historically it follows with a recession.
Yeah.
That
I-
makes sense because people are not making money.
Yes.
Yeah.
Exactly.
They don't have money, so they're not being able to pay.
right now.
So everything like is connected in a sense.
Yeah, yeah, and
Yeah.
and another thing to support this as well is Home Depot just released their earnings. You know,
Oh, really? Oh,
yeah.
I didn't
If
follow that, yeah.
if you look at their earnings, it's lower than consensus, and one of the reason that they gave is because of high interest rates, and people are not actually renovating their house more.
Ah, okay.
Yeah.
Yeah.
So it's another sign that the housing market is actually slowing down. So hopefully, we are gonna have PPI and CPI soon.
Yeah.
Of course, when we are recording this, it's gonna come out soon,
Very
few
soon.
minutes later,
Yeah.
and CPI is gonna come out tomorrow.
Yeah.
So we'll see what happens to the
Okay.
market. Yeah.
So, with this being said, is there any sectors that you guys see in particular that would be booming or?
Well, mostly I think semiconductors,
Okay.
AI. This is the main sector.
Flight to safety, is it?
Yeah, in a
Like
sense,
Magnificent
yeah.
Seven.
More or less, yes. Maybe it changed a bit, like maybe without Tesla. I'm not sure, but yeah, like the usual suspects: Apple, Microsoft, Nvidia, Amazon, and Meta. Those are the main ones that gonna lead the market higher. But at the same time, it's gonna be like mostly all of the sectors are gonna join because it can't go to 6,000 S&P, let's say, if only these 4 or 5 stocks are gonna going up.
Yeah.
The rest are stagnant. So I think we're gonna see on all over the board like green all over the board.
Okay,
Yeah,
very positive view.
very short term though.
Yeah, yeah.
Grab it, but grab it fast. Okay.
Yeah,
Hit and run.
yeah, exactly.
Bye. See you later.
And June, like, do you agree with him on this view?
I think there will be a last leg for the stock market and also for risky asset. If he said semiconductors, that means Nasdaq 100. Of course, it will affect the US 500 as well. If on a technical standpoint, if we were to look at Nasdaq charts, we have two wedge that has happened. We are inside the second wedge right now. So if Fed put were to happen, Fed put means reduction in interest rates. If it does happens, that means the market is going to rally for the last time. Hopefully, hopefully we have a rally. Yeah, but this last rally is actually the 5th wave in Elliott wave.
Yeah.
So a lot of things are coming together, but provided the fundamental sides and inflation is gonna fall
course.
gradually. Yeah,
Like
but
this-
not suddenly. Yeah.
This whole rally that we have been seeing since last year, since December, I think, it was based on the expectation that the Fed is gonna cut.
Yes.
You know, it was first in March and then in June
Yeah.
and now in September. But there's always this expectation that the Fed is gonna cut. So let's buy stocks from now. It's forward looking always. Eventually, if they're gonna be disappointed in the market, I mean, that's not gonna be a good scene.
Yeah.
But I think eventually they're gonna cut.
Mm-hmm.
Yeah. And then we don't know exactly what's gonna happen after they cut. You know, if inflation accelerates or let's say or something, so they have to raise again.
So it's gonna.
It's complicated. This all shows that we are at the last cycle of this move, of this
Yeah.
bullish market in a sense.
like
So-
we are gonna see like if inflation were to drop, then they're gonna reduce interest rates,
Yeah.
and then because the market is still strong, as
Yeah.
in GDP is still strong, it's still there. So if they were to reduce, then inflation is gonna come back. Then they're gonna rise. They're gonna raise interest rates again, and then the market is gonna fall again.
Yeah.
Yeah. So it's gonna turn and turn and turn.
It's a bit complicated.
Yeah. So you have to watch our
Yeah.
video, so you are on track on what's happening.
Yeah.
And there's one more thing that I would like to say about the job market is that Anna Wang, if you know, she's the chief economist for Bloomberg. She just released a chart just now that says California is the largest GDP contributor for the entire United States.
Oh, really?
Yeah, so anything that happens to this state is actually a leading indicator to the rest of the country. Yeah. So right now, unemployment in California is 5.3%.
Oh, okay.
Yeah. So
That's not good.
see, I see you are surprised.
Nice. I was surprised. I didn't know about that.
Yeah.
Thank
So
you,
the,
Jude.
the national unemployment is 3.9%. So it's way higher than it was. Always way higher when recession is about to happen.
And by the way, there's the 4.5 threshold.
Yeah.
Above that, recession hits every
Yeah.
time. But I was gonna say, the unemployment. Okay, we're seeing job growth and everything for more or less, but they are like second jobs. They're not the economy is not creating new job opportunities. It's the people are getting second jobs, which is not growth in a sense.
Yeah.
Like it means the opposite actually, you know, because people are not being able to pay their bills
Just
and
with
things,
one
so,
job, yeah.
So yeah, that was one thing I was gonna add to your point of view. Thank you very much.
Okay, well, that's all the time we have for today, and I think we've covered a lot of ground, and hopefully we've armed you guys with enough tools to navigate the financial market. So don't forget to subscribe and follow our channel, and thank you.
Want to turn your referrals into rewards? Join Do Prime's IB League today. Earn points for every action your referred clients take and climb the champion leaderboard. Top performers win amazing prizes like VIP tickets to Manchester United games, inclusive of flights and accommodation, and cash prizes up to $3,000. All you need to do is register, submit your IB application, and start referring clients. Don't miss out on this opportunity. Join Do Prime's IB's League now and become a champion. Click on the affiliate link in the description to get started.